Hey Toronto, what do Donald Trump's new tariffs have to do with your condo prices, mortgage rates, or that dream home in the GTA? Way more than you think. If you're planning to buy, sell, or invest in Toronto real estate, you need to hear this. Today, I want to break down something that we are seeing right now and something that hits very close to home. Donald Trump's new proposed tariffs and how they could ripple into our Toronto housing market. We love Canada, we are Canadian, but let's dive into how these tariffs might affect our housing market. Whether you're a first-time home buyer, seasoned investor, or just someone trying to make sense of what's going on, this video is for you. Let's dive in. So, what exactly are we talking about here? Donald Trump, now back in the White House, has imposed new tariffs, a blanket 10% on Canadian energy products, including oil, natural gas, and electricity. Also, 25% tariff on most Canadian goods, including lumber. An additional 25% tariff on steel, which Trump further increased to 50% on March 12th of 2025. Now you might be thinking, Jonathan, this is American politics. What's it got to do with us in Toronto? A lot, actually. Canada is the US's biggest trading partner, and our economies are deeply intertwined. When the US shakes, we feel it. This affects two major things with Toronto real estate. One, consumer behavior and confidence. Two, construction costs. Let's talk about how this affects our housing. A lot of materials used in construction, lumber, steel, copper wiring, appliances, are imported or priced in relation to US market. Tariffs increase costs. Builders here in Toronto are seeing higher prices for materials and longer delays as supply chains adjust. That means slower construction on condos and pre-construction homes, higher costs to build property. Now, let's look at the bigger economic picture. Tariffs are essentially taxes on goods, and taxes usually mean higher prices. That means inflation could tick up, not just in the US, but globally. Actually, the US Federal Reserve increased their inflation projections in 2025 from 2.5% to 2.7%, purely attributing the rise to the new tariffs by Donald Trump. And what happens when inflation rises? Central banks, including the Bank of Canada, may hold off on rate cuts or even raise rates again. That affects mortgage rates, affordability, and your monthly payments. So if you're on a variable mortgage, this could impact your monthly payments depending on what the Bank of Canada decides to do. For example, tariffs came into effect March 4th of 2025. The April 2025 Bank of Canada announcement was that they would hold the key policy rate steady at 2.75%. No rate cut, no rate increase, just an announcement saying that inflation remains close to its 2% target, but holding the rate is necessary because the US tariffs are unpredictable at this time. Investors are watching all this very closely. If this continues, it could cause market volatility and increase inflation. Let's just look at April 7th. $9.5 trillion in global stock market loss occurred over a 3-day period because investors in general were concerned about increasing trade tensions. But now to the real question, why is Trump doing all this? 1, force better trade deals. 2, bring manufacturing back to the US. 3, reduce the US trade deficit. And 4, pressure on political issues. Now, the massive question, is this just a negotiation tactic? Yes. Will it last forever? Not sure, but I don't personally believe so, and most people definitely don't believe so. Canada has retaliated with their own set of tariffs, but the real question, and the question you're here to have answered, is how does this all affect the housing market? 2 things. 1, tariffs equals higher costs equals higher prices equals inflation. Number 2, tariffs equals slower construction equals less housing equals higher home prices. The main aspect here that it affects is new construction homes coming into the marketplace. Developers need to reassess their situations and understand their new profit margins and prices, and those costs will pass on, unfortunately, to the consumer in purchasing new construction homes. But let's not even get started with pre-construction, because pre-construction sales has already been down and dropped 90% in the past 2 to 3 years previous to even the tariffs coming into effect. Let's talk about existing supply in the marketplace. Condos are sitting at 7.1 months of inventory in April of 2025. Houses are sitting at 3.5 months of inventory in April of 2025. If you are unfamiliar with months of inventory, 0 to 3 months of inventory is a strong seller's market. 3 to 6 months of inventory is a balanced market, and 6+ months of inventory is a strong buyer's market. Condos, we're in pure buyer market territory. Homes, we're in balanced market territory depending on the community and the neighborhood. Now, if you're an investor and you're sitting on cash, you're probably thinking to yourself, where's the opportunity? What do the numbers show? What's the anticipation on how this market will react? And where can I pick up deals? One piece of advice, do not be scared during market volatility. Assemble your team, understand your product, attack during times like this to achieve the highest returns. As an example, during the $9.5 trillion wipe in the stock market, Valiant Capital, with $1.4 billion in assets under management, gained over $126 million during that short time period. They understood their product and they were bullish when everybody else was bearish. Let's look at the economics of our real estate market long term. 3 factors. 1, immigration. 2, housing, supply and demand. 3, interest rates. Let's dive into some of those numbers here. Immigration. 2025 targets for Canada is to bring in 395,000 permanent residents, 305,000 international students, 367,000 temporary foreign workers. That's approximately just north of 1 million newcomers just this year alone. Now, out of those million people, 43% of those newcomers coming to Canada settle in the Greater Toronto area. New construction sales have been down 90% since the 2022 downturn in our marketplace, regardless of what has been happening with tariffs. What does this mean for future supply? 2027 completions for new units, 15,727 units. 2028 completions, 13,406 units. 2029 completions, only 3,171 units. And 2030 completions, only a small 376 units. And let's talk about interest rates. Interest rates have been on their way down. The Trump tariffs is a little blip in the marketplace that will fade in due time. What does this mean for the long-term horizon of your Toronto property or Toronto real estate? Mark my words, we will have a supply shortage. Our target for new homes is 150,000 new homes per year in Ontario. Nearly 50% of this target is allocated to the GTA. This means 75,000 new homes is our target per year. In 2029 and 2030, we will have next to no new inventory. And the problem, if builders aren't selling pre-construction today, when will they start selling pre-construction again? Is it going to be 1 year from now, 2 years from now, 3 years from now? If the pre-construction sales pick up, as an example, in 1 year from now, those condos are going to be our 2030 and 2031 new inventory. No matter what way you slice it, we are going to be in a severe supply shortage in the next 5 years, and once inventory is absorbed, I truly believe we will be back in a bull market. Mark my words. As an investor, it's imperative to understand the micro and macroeconomics of what is affecting our market to make smart investment decisions. Thanks for tuning in. Be bullish when others are bearish. If you found this breakdown on tariffs and how they're impacting everything from real estate to the stock market helpful, make sure you hit that like button. It really helps the channel grow. If you want more updates on the economy, real estate, and what's really happening behind the headlines, don't forget to subscribe and turn on the notification bell so you never miss a video. Drop a comment below if you have any questions or thoughts. We'll see you on the next one.